This video is for agents who have never been busier, but still want to know what's happening in the market and at Firefly. First, GEICO has entered the independent agent distribution channel. They're not in all states yet and are currently only appointing agents in Ohio, Illinois, and Indiana. The products they're offering right now in those select states is personal auto, commercial auto, and trucking. Firefly has been in conversation with them for a few weeks now about the possibility of getting appointed. And while those conversations have gone well, we are not ready to announce working with them yet. We don't want to overpromise and underdeliver. If or when we do start working with GEICO, we'll send you an email. It will contain a link that you can use to let us know that you'd be interested in getting appointed with GEICO when they enter your state. There isn't anything you need to do about GEICO until you receive that email. Hopefully that answers any questions you've had about GEICO. Now, Fritz has some insights about the hard market that will hopefully help you as you talk to insureds.
A fair question from agents who are in certain states is, why are my insurance markets so limited in my state? And there are really two parts to the answer to this question. The first simply has to do with costs going up. You've heard and seen the statistics about the cost to repair homes, the cost to repair or replace cars. And if you wonder if any of this is really true, just get a quote from somebody to redo your bathroom or build a pergola in your yard, and you will probably be shocked at what those dollar amounts are. And that'll tell you what you need to know. Don't forget also that record high injury awards for lawsuits related to liability claims are also a really hard thing for insurance companies to rate for and is a real driver of insurance rates right now. But as I said a moment ago, only half the problem is the rising costs themselves. The insurance companies are prepared and can generally rate for those additional risks and those additional costs so that they can pay out the claims that they're supposed to. But the other half of the problem and the answer to this question is that some states are not letting rates increase as carriers need to feel comfortable staying in that state. And therefore, there are carriers that are saying, we're going to stop writing business in this state or maybe even leave altogether. Here's one real life example, which is that in Georgia, about a year ago, the law was changed, giving the insurance commissioner more authority over, in this case, auto rates. But this kind of thing happens in a variety of states. We're not picking just on Georgia. The short of it is that you get states like these who have an insurance commissioner, often elected, who to protect consumers says, I'm not going to let insurance companies raise those rates because I care about the people in my state. The problem is that the insurance companies in many cases are saying, we're just not going to write business at the rates that we had previously approved and will not start writing unless you let the rates go up. And there are some states that are just really slow at that, really pushing back on that, and it causes carriers to leave. Just to give a real life example, we had a carrier that was trying to work with the Department of Insurance, saying, we want to write business in your state, and we're willing to do that with the right rate, but you're being very difficult to work with on this. And the answer from the state DOI was, we know. And they were quite all right with it and feeling like they were doing what was best for their consumers. But experience shows that consumers get the best rates when more carriers are in the state because they're happy with the rate they can charge, and competition then brings those rates down. Competition in the free market just tend to do that better than a regulatory body. And when state DOIs quickly approve rate changes, carriers are happy to be there. And we see that in a number of the states that Firefly works in. But we also know that some states are more difficult than others, and yours might happen to be one. So we hope that this information helps you understand why this is and help you explain to your customers what's going on and part of the reason why there are fewer carriers willing to write business in some of these states right now.
To echo what Fritz is saying there, the market really does feel crazy everywhere, but some states are definitely crazier than others. For those states, there are two things that need to happen before things can go back to normal. First, your Department of Insurance needs to approve rate increases and product changes. Second, the lack of carriers in your state creates a catch-22 of not having enough carriers in your state. When a big carrier like Nationwide, Safeco, or you name the carrier, slows down or stops writing business entirely in your state, that creates a huge influx of business that now all of a sudden is going to other carriers who weren't preparing for all those extra opportunities or for all those extra policies to come their way. On top of that, we've seen big carriers get off of existing books of business, which creates even more shopping and even more of an influx for for those fewer carriers who are still operating in that state. On top of that, their capacity, which is set by regulators and reinsurance companies, won't even allow the remaining carriers to write all of that business, even if they wanted to. There's a real life example from Michigan last year where a regional carrier was rate competitive in Michigan, and that carrier wrote so much business throughout the course of the year that by the end of quarter 3, they had reached their capacity. And so they actually were not allowed to write any new business in most of the fourth quarter of 2023. Even big companies like Travelers, ASI, and Safeco have capacity issues. And that's why in some states where they're the lone carriers that are writing business, they're putting up obstacles to new business. And in talking with some of these carriers, some of them are profitable even in these challenging states. And so their obstacles and restrictions to new business, they're not coming from a profitability concern, they're coming from a capacity concern. One of our reps told us about an agent he was working with who had an account get declined. And the agent was a little salty about it and found another place that would write it. And he called our rep back and said, "Hey, I just want you to know that XYZ carrier wrote this account and you guys lost out on it." And our rep's response was, "Who wrote it? I need to send them a thank you note because we need to get all the competition that we can get right now." The best way to break this catch 22 is for carriers who have severe restrictions or who have pulled out of a state to come back or to open their doors a little wider. And the best way to get them to do that is for DOIs to be accommodating and to grant the rate changes or product changes. Once that happens, things will go back to normal. In fact, some good news that may not help you directly today, but we've already seen in the Midwest, some of the national carriers have started to take rate decreases on new business because there are enough carriers that have come back into those markets that there's competition again and they're no longer having to worry about capacity. So hang in there. Things will turn around. As the DOI gives approval for those rate changes or product changes, more carriers will come back into your state. There will be more competition and you'll have more fun helping clients again. While you wait for that to happen, clients are going to continue shopping and talking to you about their rates. Here are a few thoughts that might help you with that.
This is a headline from a recent Wall Street Journal article about car insurance. And what it says is a couple really key things. First, that in the last 12 months, half of people with auto insurance said they shopped it around. That is a ton. Secondly, as you can see right here in the headline, it says that what they're doing to try to keep their costs under control is looking at pay-as-you-go policies and raising their deductibles. And so there are three things that we feel like you can take away from this, very practical things to try to right some of the business of people who are looking around and keep the customers you already have. First is for your own business, be proactive. Use Retention Center in Easy Links, which is coming as part of the advanced package, if you have it, to identify at-risk customers and reach out and contact them. And whether you're trying to retain customers or win new ones, there are two other things that you should do. One, consider offering higher deductibles than you have in the past. At least show them what the differences are between a 500, 1,000, or 1,000 and a 2,500 even. Right now, people really want and need to save money. And if someone else is showing them those deductibles and you don't, they might get the sale. The other thing, which is actually even better because it doesn't require reduction in coverage at all, is offer telematics discounts to your customers and prospects. Even if you've done it before and it's an existing customer, or even if you think your customer doesn't want to be tracked, right now the statistics show your customer wants to save money. And if somebody else is showing them a telematics discount and saving them $400 a year, they're going to win that business instead of you. Or if you're quoting business for somebody else's customer, a prospect for you, you might be able to win that person by offering a discount that the other agent is not. And again, best part with that, no reduction in coverage needed. Telematics makes a ton of sense. So in short, be proactive to retain your customers. When quoting, include higher deductibles and telematics discounts, and you'll do better retaining and winning auto business.